Hey everybody, some ideas on AMRN. I wanted to go over some technical analysis regarding AMRN. I did one on AVGR today that's actually very similar to this move that I'm looking at with AMRN. But we're looking at a trend continuation trade with this. And you ever run into a trade where you're running into a stock and it's on a big move and you're thinking, man, how do I get long on something like this? I want to get involved in this trade, but I don't know if now's a good time to do it. I don't know what to look for, what the highest probability of the continuation versus the lowest risk to the downside that I'm looking at taking. How do I make all that happen? So this is a trend continuation trade. I'm going to talk about that in this video. And specifically, I'm looking at a basic pattern that's developed with this, is what's called an AB equals CD pattern. I'm going to talk about that. Going to talk about the pullback, how to get long on the pullback after it signals that it wants higher, and what do you look for when it's signaling that it's looking for higher. So what are you looking at when you're putting all this together? Okay. So the first thing that I'm looking at, I'm going to drop it over to a daily. Got this big bullish move that occurred way back here, all the way up. Now we're in a pullback, and now it's retracing back to the upside right here. And it's this part in here that I'm most concerned about, this move within here. And this is where we're going to focus on because that's present day. So what interested me the most is that, and caught my eye, is I'm always concerned about the most recent levels of structure. And what I mean by that is if I draw a line at the top of my highs right here, specifically right here, that's my highest close. Right here is where I want to put it. That's my highest close on this candle right here. That's a high candle, and I want to put a line right there. That is my level of resistance. Okay. Now, one of the basic tenets of structure analysis and technical analysis is that whatever was former resistance becomes support, and vice versa. What was our former support becomes resistance. What I mean by that is that this move, this candle right here, breaks through this resistance and then turns back and becomes support. After it broke through this level of resistance, where did it come back to? Well, it just about came back to this line because it loves to retest those levels. That's just how markets move. That's just how it works. If you don't believe me, go back and study the market. When they break levels of resistance, they like to retest one another. So that's what caught my eye right here the other day, was this big break above, close above this level of resistance right here. So as I look further on back, that this break above, close above right here, that's my signal for me, this candle right here on a 4-hour or above. You see it on a 4-hour as well. Right here, 4-hour or daily, that signals to me that the market wants higher. Okay, so what I'm looking at with that, I'm just going to mark it right here so we know a candle that we're looking at for that. Okay. So what do I do with that? How do I get long? In fact, if I'm looking at this whole move, what does this whole move mean to me? I want to get long on this trade. And what I'm looking at when I start breaking this down is if I draw a Fibonacci retracement, I'm going from the lowest low right down here to the highest high candle right here. I'm looking at what it hit. It hit one of my main two Fibonacci levels, my 382 retracement, and it hit it once, twice, 3 times, never got down to a 50, just kept hanging around the 382 until we've got a clear break to the upside. So in case anybody doesn't know, a turnaround at the 382 tends to indicate trend continuation, especially with a break above to the upside. Again, I can't stress that enough. When you see that candle break above that structure level compared to previous high levels right here, that's a signal that it wants higher. Okay, and I got to turn around at the 382 retracement. That's another indicator that shows me that this is wanting higher. So now the question becomes, okay, after I see all of this, let's just say up to here, okay? Let's say I see all of this heading over to here. How do I get involved in this trade? That becomes the question. Well, what I'm looking for is that pullback into structure. And look what happens right here on recent levels, recent pullback. It pulls right back into the structure, and this is what I'm looking for in order to get long. I know when it breaks past that level of resistance, it now becomes support. Now I want to start picking up that trade. If I drop it down to a 1-hour, what I'm looking at right here is I'm looking at for a higher high, higher close candle. Okay, make this a little bit bigger so we can all see it. So I'm going to find my lowest close candle, and my lowest close candle is going to be right here. Okay, that candle right there closed at 1912. That's my lowest close candle. Its high is 1958. I'm going to draw a little line right here. That's coming in at 1958. Okay. And a little bit more. 1958. Okay, well, you get it. 1958. So I'm looking for a candle that's going to close above that 1958 mark. And what happened, and this is where I got long, is it happened right here. This candle closed at 1960. So that's a higher high, higher close candle compared to my lowest close candle. That's my entry right here. And that's exactly what I did. I eventually got in on that trade at 1964. It's actually on this candle right here. And the nice thing is once I know that I have a higher high, higher close candle, I know exactly where I'm going to put my stops. Before I even place a trade, I know what my risk is to the downside, and I know where my stop is going to go. And it's going to go right below my low right here. It's going to be about right there, about 1881. It's where I want to put a stop. If it gets down to that level, I'm looking at a false breakout to the upside, and I don't want to be in that trade if it gets down to that 1881 level. So I'm out if it gets down to that. And that's based off of my higher high, higher close candle. So now it's like, well, okay, well, where do I go with this trade? How far is this trade going? And I'm going to drop to a 4-hour. We're going to talk about that. Clear some of this stuff out here. And if I go back to this first leg right here, I'm looking at what's called developing an AB equals CD pattern, okay? So I'm looking at this initial part right here. This is A. Make these a little bigger here. Even a little bigger. Okay. This is point A, and then I'm going to draw that to point B. That's going to be B. My A to B, and I'm going to draw a line making my A to B. The lowest low of that candle, lowest low to the highest high, right there, okay? Now I'm going to clone this move. Make a direct copy of it, and I'm going to move it over to my lowest low, which is going to be right here. Everybody see where I put that? I'm going to put it right down here. My lowest candle right here. So that way, when I'm looking at this, AB is equal to, let's see, there, and then D is going to be right here. D is going to be my sell, okay? Right there. That's an AB equals CD pattern with a turnaround of the 382, which indicates trend continuation, with a break to the upside, indicating to me before I even place that trade, the market has signaled higher using a higher high, higher close method, going back to the 1 hour to get long, place my stops. And now, after doing all of that, I know exactly where my price target is going to be. It's right at the termination of that last leg, which is going to be at about 2276 or so. I'm going to drop a line right at that level right here. Now, one thing that I have to take into consideration all the time is always looking left, because structure leaves clues. All these trades are based off of technical structure. I just drew a line right there, and if I look left, look where that line comes in at. It comes in right at those previous highs or right about near it. How interesting is that? And this is where people start to argue with me online. How charts don't work, they don't mean anything. Let's see what happens with this. But right where I drew that line, I draw a completely separate line right here, and it comes in right where that structure level was before. I don't think that it's any kind of coincidence that happens. After all, a chart is nothing but a graphical representation of the psychological decisions that people have made within their trades, okay? So when I take a look at something like that, that's pretty compelling to me. I can do something else here too. I can go ahead and I can take a Fibonacci extension, do it for my lowest low, my A to B right here. I'm going to do the fib extension on my A to B, lowest low to the highest high, and then back down on in, and see if that matches up with anything to help build a case as to where this thing's going. It starts to come in. You can see that 1618 comes in right at the very peaks right there. I'm going to get stopped out here on this video here, so I got to wrap this up. But you can see that 1618 comes in right at the very top of that candle. So that's going to be my sell. I'm actually going to front load my order, make sure I get filled about 2280. And that's the methodology behind this trade. Trend continuation with a higher high, higher close works really well. Let's see what happens with the earnings tomorrow. And best of luck to everybody. Take care.